Hey everybody, it's Eric. Welcome back to the channel. In this video, we're going to walk through how I got into this risk-free call butterfly. This is for SPX 0DTE options. I got a nice profit tent up at 63.20 where max gain would be about $1,000, but I do have a minimum gain right now of simply $50, which would easily cover the commissions. Basically got into 2 call debit spreads, and I was able to sell 2 call credit spreads to cover the debit, and that's how I get into the risk-free. Let's kind of check that math real quick. So around, what was this, 11 o'clock or so, I bought 2 call debit spreads for 75 cents. These were out of the money spread. So I'm risking $75 per spread to take the trade. That's my initial risk on this trade. Now I know if the market were to rally, I'd be able to sell the other credit spread in order to cover the debit and convert this into a butterfly. So I got a credit of $1 when the market rallied, and we're going to look at the chart here in a second. The market ended up rallying and my limit order got filled. Once I was in this debit spread for 75 cents, I already knew what the credit needed to be to go risk-free. It actually only needed to be 75 cents, but I put it at $1 thinking we would get some kind of move, and $1 is going to more than cover commissions plus a little bit of profit if it gets filled. So with 2 spreads each, I paid $150 for the debit spread, but I collected $200 for the credit spread. And again, that's how the math works on that. So you need if you're converting from a debit spread and then you're selling a credit spread to convert to a butterfly, you need the credit to be greater than the debit. That's how you get risk-free. Let's talk about the setup real quick. So for the setup, I am testing out the Alpha Crunching daily forecast indicator for TradingView. This is still in the works. It's not publicly available, but I'm working on it. This is the same indicator that's on the Alpha Crunching site, but I'm trying to get it on the chart with TradingView. But basically, we had a little bit of a choppy forecast, but we can see that from about, let's call it 10:45 or so, through 2 o'clock, there was a little bit of an uptrend there. Nothing major. Our average SPX points is only going from, let's call it -6 or so to +6. So I wasn't expecting like a huge move, but I thought maybe we could get something. So if we go back to the chart, this is the same line graph. You can see we're expecting a move from -7 or so points up to maybe 6 points. And so once the market opened up a little bit, we did have Powell speaking this morning. So kind of just got to let the market open up for about an hour. And then once we reached that point where we could see potential upside, I'm showing you some hike and action candles here. The candles were green around this time. I bought that call spread that was a little bit out of the money. And then we traded sideways. I didn't really think this was going to do that well, but then we got the surge that the forecast was showing. So we got this surge. And if you'll notice, the forecast is on the chart before the candles are forming. So this is a non-repainting fixed forecast, which shows the previous 4 weeks average movement. So we're really just trying to trade in the direction of the forecast, if there is one. This one was pretty weak, I'd be honest with you. I prefer seeing a trend of I like to say 20 points or more. Today, the trend was maybe 7 to +7, so let's call it 14 points. But it was enough to get into something, and now we're just kind of chopping around here around 6,300. So if the market closes up closer to 63.20 or so, then I might be able to bag a bigger trade. But right now, I'm in the risk-free portion of about $50 here. So again, I would need 20 points to really max out this gain. But also, I don't actually have to have it close there. We could rally up here and then just make money on the spreads and close it, maybe close one and let the other one ride kind of thing. But that's what I got, and we'll see you in the next video.